Welcome back to the Investment Desk. Today we are moving from the why of money to the how. Most people work for money, but the wealthy make their money work for them. Think of investing as planting a seed. If you eat the seed, you're full for a day. If you plant it, you're fed for a lifetime. But before you plant, you must understand risk versus reward. In the world of finance, there is no such thing as a guaranteed high return with zero risk. If someone offers you 30% monthly returns with no risk, run. It's a scam. Then there is the time value of money. A dollar today is worth more than a dollar tomorrow because of its earning potential. This leads us to the most powerful force in the universe: compounding. If you start with $1,000 at a 10% return, next year you have $1,100. The year after, you earn 10% on that $1,100, not just the 1,000. Over 30 years, that small seed becomes a forest. Now let's look at where to actually put your money. In this section, we explore traditional investments. For the conservative investor, we have treasury bills and bonds. These are essentially IOUs from the government. In many African nations, government bonds offer significantly higher interest rates than in the West, sometimes reaching 13% to 18%. But we cannot talk about African wealth without talking about SACCOs. For many, SACCOs are the backbone of financial growth, offering dividends often exceeding 10% and providing a gateway to land and property ownership. On a global scale, we look at ETFs and index funds. Instead of trying to find the next Apple or Tesla, you buy the whole market. When the top 500 companies in the US grow, your wealth grows with them. It's the ultimate set it and forget it strategy. Finally, we reach the major leagues, the stock market. This section is about building long-term wealth through ownership. When you buy a share of a company on the Nairobi Securities Exchange or the New York Stock Exchange, you are a part owner. There are two ways to win here. First, growth. You buy a share at $10 and sell it years later at $100. Second, dividends. This is the company sharing its profits with you directly in cash. For the beginners, focus on fundamental analysis. Ask yourself, does this company have too much debt? Is their product something people will need in 10 years? For the advanced, we look at technical analysis, reading the psychology of the market through price charts. Remember, the stock market is a device for transferring money from the impatient to the patient. Your goal isn't to trade every day, it's to build a portfolio that stands the test of time. Thank you for watching. Consider smashing the like, subscribe, and share button. Also, comment below. We see your views about this video. Cheers!